Hello and welcome to an FX Times daily fundamental recap of the Forex market. I'm market analyst Nick Nassad. Today is Wednesday, December 2nd, 2009. Today's trading saw the greenback stiffen following the rally in higher yielding currencies that we saw yesterday on higher risk appetite. If we zoom our euro-dollar pair out slightly, we see that we had a rather strong rally following our low on Friday's trading. And today we saw the market consolidating somewhat as we await some important releases, including the ECB interest rate meeting tomorrow morning and then Friday's U.S. non-farm payroll release. So traders may be pausing from pushing risk-oriented currencies higher and are maybe moving to the sidelines for now. We rallied earlier this week as the standstill regarding the Dubai debt situation and the concerns there eased, and that this rally here managed to cut all the losses that we saw in a flight to safe haven at the end of last week. We did have the ADP employment change come out for the US, which came in weaker than expected, so that could have added to a slight sense of risk aversion. Also, US stocks erased part of their early morning rise, and the Dow Jones index, for instance, by midday was in negative territory. Now we still remain above the 1.50 level, and if we zoom back, we had seen that had acted as resistance for a better part of November, but following a break above that in the middle of last week, we are hanging above that area this week. In news from the Eurozone, we had producer prices released for the month of October, and we saw a 0.2% increase following a 0.4% decline in September. So that pushed the annual rate up to a negative 6.7%, an improvement on last month, but still pretty far down in negative territory. The increase in the monthly rate was driven by a rather large increase in energy, which rose 1% compared to a decline of 1.6% in September. So that was the main component pushing the producer price index up. If we look at the core rate, which excludes both construction and energy prices, we see that we had an actual decline of 0.1%. So underlying inflation is definitely under wraps currently and does not pose a problem for the ECB. As I mentioned earlier, the US released its ADP employment change, which is a measure of private sector employment, either growth or decline, in the non-farm sector. So we saw 169,000 jobs shed by the private sector, which, though an improvement on September's total, was a weaker than expected figure compared to forecasts. It is the 8th straight month that job losses have shrunk in the indicator, so we are pointing towards a gradual improvement in the labor market, as we can see from this graph to our right. By sectors, we saw that the service providing sector lost 81,000 jobs, and employment in the goods producing sector declined 88,000, with the manufacturing sector down 44,000. So that was the smallest decline in manufacturing since May of 2008, and that may be the first place we see positive job growth when the US does begin to see jobs being added. So while the index is showing gradual improvement in the labor market, the figure probably added to a bit of risk aversion in New York trading and gave traders a chance to square their positions if they had already planned to do so following the rise we saw yesterday and starting from late Friday. The yen, meanwhile, was weaker across the board in today's trading, and the greenback rose from its open around 86.60 up to 87.40 in European trading, and then it came close to retesting that level in New York trading. The yen strengthened very sharply in last week as it was a big destination for safe haven flows following the Dubai debt news, but after reaching this 14-year low here right at the 85 level, there was a pretty big discussion underway in Japan that this would harm the economy, and today the Prime Minister came out and said that the strengthening of the yen can't go on this way. the Bank of Japan added extra liquidity or boosted its quantitative easing in yesterday's trading, and that weakened the yen, but that's not going to be enough to change the underlying dynamics of the yen strengthening. So we might see a lot more talk about central bank intervention from the Bank of Japan, and there have been some meetings between Japanese and US officials, which could signify a precursor to an intervention campaign by the Bank of Japan. So that's definitely a story to keep your eyes on. Now we have support line here at near the 87.50 area, and we have set up a bit of a support trend line if we connect our low from today, and you can see that we're squeezing between these two levels. So we'll see if we have this is the 87.50 level is very important to watch to see if we have a move downward or if we extend the gains against the yen. The euro-yen pair that we see here also rallied in today's trading, though it has given back some of those gains as the euro was weaker against the dollar. Another bit of news from Europe, we had UK construction PMI come out in November for the November period, and we saw the reading come in at 47.0, which was a slight improvement on October. Still, it's the 21st straight month that this sector has contracted, or that the PMI has posted a reading below 50, but at least the pace of decline has eased somewhat in November. So this was the highest reading since August, and it followed 3 straight months of declines in the PMI. If we take a look at the pound-dollar pair, we see that the pound was a pretty strong performer against the dollar, managing to move above its high from yesterday, though it did give up some of those gains in New York trading. Also, the pound broke below a support level in the euro-pound pair here around the 0.9065 area, and we see that we extended those gains by the pound in New York trading. The other big story today was another surge forward in gold prices, which hit a high, a new record high near the 1200, above the 1200 area. So since we didn't have much of risk appetite in the currency markets, except maybe in the pound pair, the Australian dollar, US dollar pair, which might be most responsive to gold prices, was trading rather flat today, and though it did set a new high for the week, it didn't manage to push much above where we saw the levels from yesterday. Finally, oil prices were actually down today, sliding about 2% to trade below the $78 a barrel level. Pardon, the $77 a barrel level. And we can see here in the US dollar Canadian dollar pair that following a rather strong rally in favor of the Canadian dollar, we're seeing the greenback pair some of its losses from yesterday as well. So we found some new resistance at the 1.050 area, and we'll see if that level holds for the rest of today's trading. Now let's take a look at some upcoming releases. Tonight, Australia will post its services PMI along with a reading on retail sales, while Japan will post its capital spending for the third quarter. Overnight, the Eurozone and the UK both post their services PMIs. In the Eurozone will also get retail sales figures and the second release of third quarter GDP. That will be followed tomorrow morning by the ECB interest rate meeting, though while economists expect the ECB to hold rates at 1%, there are some expectations of comments regarding an exit strategy to the ECB's extra liquidity measures. That will be followed by several U.S. releases, including jobless claims, the ISM non-manufacturing index, so a measure of services, and a final version of U.S. labor productivity and costs. Also, the Fed chairman, Ben Bernanke, will be testifying in front of Congress as he awaits his vote on whether he will be reappointed as the Fed chairman. So that will do it for today's market recap. For more news and analysis and videos, including a technical recap video for the day, please go to our website, fxtimes.com. Thank you for watching, and happy trading.